Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are after market close on Tuesday, September 19th. We're going to take an updated look at Mullen Automotive. So as we called out in the last video, Mullen has been on this nice upward swing lately since it double bottomed here right around 39.01 and has been upticking ever since. You see nicely moving through the support and resistance zones that we had plotted, as well as busting through this downtrend resistance, which we'd been saying for weeks was the most critical component if Mullen was going to be able to push out of this, well below $1 level that it's found itself at. It was going to need to overcome that. Otherwise, it was just going to continue to bump into it and push down, no matter how big the push, like we see on this day, up over 68%, but still got stuck under this downtrend resistance and then lost a ton of that value and still hasn't gotten back to that range yet. So today we see a couple of things. There's a couple of levels that I want to put because we do have this pretty big gap between 61 and 77 cents, which is a huge percentage gap, as I'm sure you know. And so I wanted to grab some levels in there, and then we'll zoom into the intraday and see how it's playing off of the levels. And then we'll flip over to the think or swim study and see how things are situated on the hour chart there. So if we zoom in a bit here and see where we have some consistent flips from support to resistance and vice versa, this sort of double top or near double top on these candle bodies lines up relatively well with the wick of this candle and the wick of this candle. So I'm going to place that, it's always a little bit of a judgment call, but I'm going to place it there for now, right at 60, say just shy of 69 cents. So this puts it from 61 to 69 to closer to 78 really. And that said, those are still some pretty big gaps. I don't know if there's been enough. Actually, I would take a level here, to be honest. The bottom area of this candle body and the double wick on today's and a few days ago candle bodies, or candle wicks, I should say. So that's something additional to go off of. And if we needed a level in between here for now, I'll put this in. And I know it starts to look a little cluttered, but it's not really that cluttered. Once we zoom in, you'll see. Okay, so there's a lot of levels on the daily, but again, that's just because in a pretty brief period of time, it's swung all the way from like $1.50 plus all the way down to 39 cents and, every sort of price range in between. So that's just sort of why. But if we zoom in and sort of look at how this would play intraday, so let's scroll back, a couple of days and just take some for instances. So it came in here, shrugged off in the pre-market, that 65 level, found support at this 61, another push and a reconfirmation, got it through that 65, skipped a level, came up to 72. See, so it's batting around nicely, finding support and resistance at those levels. And then I believe this was yesterday. We'll confirm that in a moment. Came in, immediately lost the battle for resistance here and lost at a couple of levels. We see that's sort of a theme with Mullen. When it sort of bursts through or falls through, it tends to skip a few levels and then retraces back to test them again, right? So it came back here and it couldn't quite make a run at that 69-ish level, but it was trying to base sort of over this 65 level. However, it slipped, confirmed resistance, and then fell through a level into close. Now, this was today, right? Yeah. So today came in, couldn't hold the 61, came down, immediately caught this 56 support, and then made another run up here. This could have been a tricky play because it could have appeared as though maybe it was going to try to run towards 65 when it confirmed support over here, but it was just kind of basing and then it slipped, and a quick reconfirmation on the resistance, and then it just sort of trickled off into close. So, not a major day today in either direction, down a couple percentage points, but, playing nicely off of the levels. And, if you get confused because it's like, well, there's nothing here, but what you have to pay attention to is it's trying to base and build support over there. And then if it's going to push and run, this is the 65 level we have, but don't neglect daily pre-market and aftermarket levels, right? This was a pretty obvious level. 62-ish level was all of the after hours action got topped out there, and then into the pre-market it was also topping out there. So of course that plays a role in the intraday as well. All right, so flipping over to the think or swim study. Now just keep in mind this is on the hour time frame. So just taking a look at where we are in the hour. So since we had the TTM squeeze indicator was triggering here for several candles, and then when it fired, really nice indication there, pushed out of the channel, and then what do we look for? We look for it to pull back to the mid-range of the channel, this bright blue line. But if something has incredible strength, bullish or bearish, what we see is when it pulls back, it actually only pulls back to the cloud. You see this green cloud indicating a bullish trend, and it used that as support, pushed out again, caught the wave, the cloud as support again, and so that allowed it to get these two additional big pushes in. And then when it did pull back to the mid-range, it caught very clear support, so we were again ready for a big push out of the channel again. And what do we look for? We look for it to return and test the mid-range. And what happened this time, starting yesterday, was it slipped, and it flipped that to resistance right away, and then it came down, and then not until today it came and had to test the lower bound of the channel and found support there, and then very quickly retested the mid-range, shrugged it off, and caught this mid to low range of the channel here as support. So what it's going to do off of this is going to be a question: is it going to be able to get support over that mid-range, or is it going to catch some additional bearish momentum and need to test the lower bound of the channel again? We'll have to wait and see. It's looking like it's trying to make a go at it again in the after hours, but who knows how that'll play out. You also see here 4 of the last 5 candles have been triggering. So if that's going to fire as we head into tomorrow, that could lead to a big push one direction or the other. All right, folks, I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.